So let's talk about the top 5 to 6 stocks that sold off this week. Tomorrow, I'm going to be talking about the top 3 to 5 stocks that gapped up, especially for those that love to wait for potential short setups. But let's go ahead and jump right into it. Again, I don't normally make videos like this, but if you would like me to make more, all I ask you to do is drop a thumbs up and subscribe, as again, we would greatly appreciate it. Let's go ahead and just jump into the screen. The first one that we're going to talk about is Shopify. A lot of you guys are going to be maybe wondering why there's been such dramatic moves this week. For those that are a little bit newer to the market, the stock market goes through quarterly earnings when these companies report earning reports, and then once they're reported, the market reacts. If they're good, they tend to pop up. If they're bad or worse than what is expected, then they tend to gap down, and that's what you're seeing as of today. Shopify, very popular platform, sold off. At one point, it was at lows of 77. Right now, it's currently trading at lows of 81. Previous price point was around $94 a share. Previous highs right around more of a realistic one, right around $92. This offers about nearly a 14% return, so just something to take into consideration. I do want to remind you that just because a stock sold off doesn't mean that it needs to recover anytime soon. Although Shopify has been seeing some steady growth this year, I do want to remind you that Shopify has a history of selling off from what it experienced from 2022 up until 2023. There was a lot of selling pressure, so don't think that it has to recover anytime soon. It tends to find a common support range right around $77 a share, and again, a more of a common resistance range right around $85 a share. Monday was actually one that I followed up with, and the reason why is because when it reported earnings, it was already overbought based off of expectation. It gapped down, but realistically, this gap down just brought it back to price points that it was previously trading at, so I don't think it's too significant or anything really important to talk about. Sony Group reported earnings this week. I thought this one was quite interesting because from the current price levels, if it were to recover to a very common resistance range of right around $99 a share, 11%. Not too bad. Again, nothing crazy, but not too bad. Especially based off of recent patterns, it's been trying to make steady progress on the upside. Again, just because it was previously trading at 100 doesn't mean that it has to get there again. And looking at overall lows, it does have lows of $61 a share based off of previous lows, and then it has previous highs of $132 a share. So just another reminder that yes, it's cheap, but the cheap can always get cheaper, so take that into consideration. Upstart reported earnings, and again, I love to look at different time frames to get a bigger perspective or a bigger picture of understanding of the lows and the highs of this given stock and its overall direction, right? I think that's something very important where day traders try to focus on the 1 minute or on the 5 minute time frame, but that doesn't really give you enough data to kind of see the way that it's trading for at least maybe the past month, maybe the past year. Although your intentions might not be to hold it that long, it's useful information because you can see the true direction of that given stock for at least a larger period of time. So you can see that Upstart has not had the best track record, consistently selling off. So the idea with this is, okay, well, we can't be too surprised if it continues to sell off from where we are right now. Yes, it's cheap based off of previous price points, but the cheap can always get cheaper. I just think it's something worth at least noting because when it reported earnings, it gapped down, and from where we are right now, if it were to recover, which there's no indication of that, it offers about a 35% return if it were to recover back to that $36 price point. Roku reported earnings, got absolutely destroyed. Sorry for anyone that's still holding Roku, but Roku again had a very strong uptrend during the pandemic and then very strong sell-off within 2022 to 2023 and pretty much has been trading sideways and has been trying to recover. On the 4-hour time frame, you can see that it has a nice gap up, reported earnings, nice gap down. Previous lows of $55 a share, currently trading at 71. If Roku were to recover, which again, it does not have to, but if it were, offers nearly a 36% return. I like talking about these just because, again, there's always the what if. Not that you have to, but you can set your alerts. If it meets your criteria, then maybe you can choose to trade it if it meets your criteria and actually showing signs of a reversal, right? Showing signs of progress, that it's actually recovering. Then there's Snapchat. Snapchat actually, I don't think reported earnings this week. I think it reported earnings last week. Got absolutely demolished from the current price point of $11 a share, which is a previous low. based off previous highs, offers a 56% return. But even if it just goes back to previous lows, right around the moving average, $15 a share, that would be around a 39% ROI. And if it goes up to that EMA line, a 10% return. Obviously, this was a very aggressive sell-off. I would encourage you to look into the financials of why Snapchat sold off. My biggest understanding of why it's so aggressively sold off is Snapchat continues to change its model in the way that it produces revenue, and this just doesn't look the best for investors, as again, it looks like they're still trying to figure things out years after already being established. And that's just, I would say, more discouraging for new and ongoing investors that maybe they are not as, I would say, stable as originally expected. So it is something that I'm paying attention to. This one's probably one of my favorites, which is why I set my alert for the break below, but I also set my alert for the break above. Because if Snapchat were to recover based off of current price points and previous highs, it offers a 55% return. I personally love trading reversals, but just because I love to do so doesn't mean that you need to. But I like to make sure that it's actually indicating signs of an uptrend. I don't try to buy at the lowest price point. I try to buy when it's actually beginning to recover and showing signs of higher highs and higher lows, right? Very simple. I talk about that a little bit more in my LPP lesson library, which is the second link in the description down below. I saved the best for last. This was a super hyped up stock. I'm sure if you're part of Reddit platforms, this was something that maybe crossed your screen. It's an absolute crap company. It was super overhyped, super overvalued, and it hit highs of $1,000 a share today. It crashed 25%. And yes, it did crash. Anything losing 1/4 of its value is absolutely insane. Think about that. 1/4 of its value is gone from where it opened. Now, again, this thing was coming from lows of $250 a share. So you might be like, well, Ricky, this thing is still up a great amount. Who cares? Right? This is a perfect example of what a glorified, hyped up pump and dump stock looks like. You can look at based off of recent volume and previous trading volume. Recent volume is much greater. It's continuously pumping up, and just like a slingshot, the longer it prolongs a pullback, the harder it corrects itself. And today, we finally hit highs of $1,000 a share, and all it did today is sell off. And in my opinion, this could just be the beginning, because realistically, it's a crap company that's most likely going to return back to its previous trading price of $300 or $200 a share. And for me, this is just an amazing short opportunity if I see it break below the moving average, and if I see it showing signs of lower lows and lower highs as it continues to retrace back to previous lows. So it is something that's in my radar, but again, I'm in no rush to jump into it, as it could begin to find a support and then try to recover. But I think this is a great example of a stock that you should never be afraid to lock in profits. We have this saying that we shared with our LPP students today. Our LPP students tend to be beginners, right? Just like maybe many of you guys. And the idea is never be afraid to leave the party early. And I feel like that's a great concept to have when understanding or having an idea of when to lock in profits in the stock market as a beginner. Never be afraid to leave the party early. Never be afraid to lock in profits early. Maybe leaving some potential profit, but again, in the grand scheme of things, I would rather be someone that sells early than someone that sells late, down 25%, when you know that this is an overhyped, overvalued stock that is only a matter of time for it to correct itself. Again, tomorrow I will be talking about the top 3 to top 5 stocks that are very overbought and that saw a huge gap up for potential short opportunities, but we'll talk about that tomorrow. I really hope that you guys enjoyed this video, and also do not forget, we are giving away a Corvette C8, and our prize week just started, meaning that every order placed today gets a prize. So you can head on over to shoptechbuds.com, and they have the list of all the prizes from Xbox Series X. I think we actually gave away the Xbox today. You guys can see it on our Instagram. I think it was a guy named Jake from California. We posted his order, but every day we're going to be announcing who wins these prizes, because if you don't win one of these prizes, you at least get cash in every order. But again, every order placed today gets a prize or cash, and you also get automatically entered for a chance to win this Corvette C8. So it's a double win. Make sure you don't overcomplicate it. Don't buy anything you don't actually want. Keep it simple. And good luck. So I appreciate your time. Hope that earned a thumbs up. Please consider subscribing. And don't forget, if you guys want to watch me trade live the next time the market's open, I hope to see you there. And it's the second link in the description down below to sign up and to tune on in. Like always, let's make sure that we end the year on a green note. Take care, team.